Morning, Steve Freedy in Chicago with the morning grain comments. We had a USDA monthly supply and demand report, and the report was bullish. The USDA came out with a corn yield of 146. That's 20 bushels below their June estimate. There are some estimates out there even lower than that. They lowered their new crop corn carryout to 1183 million bushels and reduced demand pretty dramatically. And so the debate right now is, are prices high enough to have that much of a decline in demand? They also lowered the bean yield to 40.5 bushels and next year's carryout to 130. That's a minimum carryout. And they also reduced demand. So again, are bean prices where they are today high enough to actually have that drop in demand? Surprisingly, the USDA did not raise this year's U.S. wheat crop as much as the market had thought, and they lowered the wheat carryout to 664 million bushels. That's below the average trade guess. Right now we've got beans trading 30 higher, corn about 20 higher, and wheat about 15 higher. And expectations are that if the weather continues the way it is, prices will probably have to move higher to reduce demand. The weather front this weekend looks a little wetter across the Midwest, especially across the southern, let's say, half of the Midwest. Early next week, there's chance of rains in, let's say, the northern third of the Midwest. So it is going to be a critical weekend and next week as far as rain for the Midwest, and whether this is going to help the crops, whether this is going to change the overall pattern, or like we've seen over the last 30 days, when the actual event happens, it's drier than what the forecast is. So again, the USDA report positive, prices are trading higher. And as always, these are my thoughts and not those of ADM Investor Services or ADM. And hope you have a safe and profitable trading day.